Back to the MD Investor channel where we're talking about setting goals, achieving goals, financial intelligence, educating ourselves and teaching our children about financial information so we don't have to go through hardship and working hard for every penny that we earn. We talk about breaking the cycle of generational poverty. Breaking the cycle of generational poverty. New video today, guys. Before we get into the new video, if there's people out there you think could benefit from this information, let them know about the MD Investor. Send them the link. On YouTube, it's MD Investor. Don't forget to hit the like, hit the subscription button. Definitely hit the bell so you'll be notified when new content comes out. We try to send out new content weekly. On Instagram, it's MD Investor 1. The last video we did, guys, was about starting a dividend portfolio. Starting a dividend portfolio, guys. Little by little, guys, we have to begin to build, and increase our passive income. No one is going to do it for you. I don't know how old you are, but you should have lived long enough to realize that no one is going to do it for you. This is something that you have to do for yourself, guys. You have to get educated. You have to get motivated. And most importantly, you have to take action. No one will do it for you, and no one will do it for your children. You gotta do it. You gotta learn. You gotta take action. You gotta pass it on to your children. That's how this thing goes. Okay, that's how it keeps going. So, in that same vein, like I said, the last video we did was about starting a dividend portfolio. We're talking about some of the characteristics you want to look for. Definitely go back and look at that video if you didn't see it yet. We talk about characteristics such as dividend growth history, stability. We talked about competitive advantages, different things that we looked at. This video, guys, we're going to talk about dividend growth. Dividend growth. We have to grow the dividend, right? Because if it stays stagnant, we know that you're going to lose buying power, right? Because we know that inflation, there's something that they call inflation, which is about 2 to 3%. It eats away at your money. That's why you put your money under the mattress. You're not really doing anything for yourself because the buying power is going to be less, right? We know that if you put $100 under your mattress in a year, you'll still have $100, but the buying power is going to be decreased by about 3%. So this brings us to this page where we are right now. So we're going to look at a couple of examples, guys, to whet your appetite, to let you know that I am for real and this is real information out there. So this is a website that is going to enable us to be able to look at different companies and the dividend history. So a very popular company out there, McDonald's, right? We all know about McDonald's. Ticker symbol MCD. Like most of the companies out there, it pays dividends 4 times a year. So there's a ticker symbol right here. This shows you what the current price where it's trading for. The annualized dividend, which basically means the amount of dividend you're going to receive per year. You take this amount, which is $5, divided by this current price. That gives you the dividend yield, which is currently 2.3%. It gives you, it tells you the amount of dividend that you've gotten paid, and it tells you, and they give you quarter by quarter, right? 4 times a year. So let's go down here a little bit. Let's go down here to November 2017. McDonald's was paying a dividend of $1.01, which was about 2.3%. And then this green button right here, this green number, the 7.4%, which basically means the increase in the dividend over the previous dividend. So we go back down here, you said, well, it was increased by 7.4%. And you said, well, what was the previous dividend? The previous dividend was 94 cents. You see, they raised it to $1.01, which was a 7.4% increase in dividend. You see that? That's the power. Inflation is about 2 to 3%. You're more than double the rate of inflation. And then they paid that same dividend, $1.01, for the entire year, for the next 4 quarters, right? 1, 2, 3. Normally they do 4 quarters. I only see 3 here. Maybe there's a little snafu. In any event, we see the next November, right? We can see November is when McDonald's seems to increase their dividend. The next November, 2018, they raised the dividend from $1.01 to $1.16, for a 2.5% dividend yield, which was an increase in the dividend of 14.9% dividend increase over the previous dividend of $1.01. Do you see that? Can you imagine if your job gave you a 14.9% raise? That is absolutely powerful. By the rule of 72, you remember the rule of 72, you take 72 divided by your rate of return, that gives you the number of years it would take to double your investment. So in this case, with almost a 15% increase in dividend, right? If we were to continue this dividend increase of almost 15%, the dividend would increase or double. You take 72 divided by 15, it's probably about 5 years, you basically double your dividend. But the power guide I want to show you here, that what did you have to do for this 14.9% raise? Did you have to go to any of the McDonald's Corporation meeting, headquartered in Chicago? Did you have to give any annual report? Did you have to submit any report to your supervisor? You had to do absolutely nothing, and you were giving a 14.9% raise. We fast forward to the next November, which was November of 2019. The dividend was raised from $1.16 to $1.25, which is a 9-cent raise, which is equivalent to a 7.8% dividend. First thing, guys, we have to say that none of these dividends are guaranteed, right? The board of directors at any moment can come together and have a meeting and say, you know what, business are not going great. We can't support the dividend, so we're going to cut it. But that's why the last video was important. The dividend aristocrats, right? Because they're the company that have at least a 25-year history of increasing their dividend. They are what they call shareholder friendly. They want to reward shareholders for investing in the company. With track records like that, guys, with competitive moat, them dominating their categories, they're really not going to want to cut their dividend. Okay? So 7.8% raise. How many of us out there are getting a 7.8% raise? Okay? That's the power of dividend. Okay? That's the power of passive income. Imagine if what we would have to do, right, to get a 7.8% or a 14.9% raise. We have to go to our job, go to our boss with our tail between our legs and say, well, sir, you know, I've been working at this company now for about 10 years. I'm all in time. My work and my productivity is second to none. You have to do all that stuff. And even with that saying, you might, one, not get it. And if you do get it, they might say, well, you know, sir, John, Bob, Rachel, Patricia, sure, we'll give you the raise, but we're going to have to increase your workload. You know, maybe you'll have to come in early, or maybe you'll have to work on the weekend, or maybe you'll have to have whatever it is. It wouldn't be passive. That's the power of passive income. Let's look at some other companies. Let's look at 3M, ticker symbol MMM, and take a look and see what that has to show us. Okay, dividend history for 3M. The ticker symbol is MMM. The price is trading for now $160.39. Annualized dividend is for dividend you get for the year about $5.88. The yield is 3.7%. Okay, the green is very good because you see the rate of increase of their dividend. Okay, we go and we look here. We go back to we see right now they're paying $1.47 per share for the dividend, right? They said the ex-dividend date is February 13th, which means that today, actually, the day of making the video, is that 3M is trading without its dividend, That's what ex-dividend means. It's trading without its dividend. The declaration date was February 4th, and the record date is February 14th. The date that this dividend will be paid is March 12th. I think I did a video on dividend terms you should know. Basically, the declaration date is the date that the company declares we will pay a dividend. That was in February 4th. The record date is the date that you have to be on the books. Your name has to be on the books as being a shareholder. That's February 14th. And the ex-dividend date is the date where the stock trades without its dividend. In order to get the dividend, you have to buy the stock before the ex-dividend date. And of course, the pay date is the date that we all like, the date that we get paid. But we see that there's been a 2.1% increase in the dividend from 3M. They went from $1.44 to $1.47. Not a great increase, but you'll see fluctuations, guys, as business change and the environment and different taxes and different things will affect the dividend. You'll see, go back in history, you see 5.9% raise. They've had a raise of 15.7% in 2018. But the bottom line is, guys, passive income, the companies are rewarding shareholders. Let's look at another one. Home Depot, HD, ticker symbol HD. We all know about Home Depot, right? You go there when you need your hammer, your nails, and all these things. Ticker symbol HD, Home Depot. Price, $242.15 what it's trading for. Annualized dividend, what you're getting, you get that divided by 4. The yield is here. So 3M is growing its dividend very, very aggressively. You look here in the green and you see very, very large numbers, right? From 2014 to 2015, the dividend increased 25%, from 47 cents to 59%. And then the very next year, and you can see in March is when Home Depot raised its dividend in March. The next March, 69 cents, which is an increase of 16.9%. The next March, 89 cents, was up to 29%. Then up again, 15.7%, $1.03. The next March, it went up to $1.36 or 32% raise. Can you imagine getting those raises at your job, guys? 32% raise, 15% raise, 29% raise, 16, 17%, 25% raise. These are crazy numbers. So we are waiting with bated breath for March of 2020, which is next month, to see what does the company officers in Home Depot decide to do with the dividend. They raised it to $1.36, and March 2020 is next month. What are they going to do with the dividend? Are they going to raise it, and how much? They're very aggressive in raising the dividend, very shareholder friendly. So just a quick chart guide to what's your appetite to get you guys motivated. Let's look at another one, and I'm going to show you different ones. I'm showing you large growers were aggressively raising their dividend. I'm going to show you slow growers. Let's look at another one. Ticker symbol T. AT&T, telecommunications giant. AT&T, ticker symbol T. Trading, this the price it's trading at, $38.32. This is the annualized dividend, guys, divided by 4 is how much you get per quarter. This is the dividend yield, 5.4%. As you look at these numbers in green, 2.1. You see, compared to Home Depot, this is a very anemic growth in its dividend. Does not raise its dividend that much. And you'll see that in certain categories, certain sectors, like the utilities, like the telecom space, they'll raise it very small. And that's why you want a mix of different companies in your portfolio. You don't want to have only small growers. You want to have some big growers, some Home Depot, some big growers, very aggressive companies. So 52 cents per share for a yield of 5.4%, and it changed only a penny from the last dividend, from 51 cents. Not a big growth, not a big grower of the dividend, only 2%. Okay, now let's move on and look at another company. Let's look at Verizon. Ticker symbol VZ, which is a competitor of AT&T, also in the communication space. Ticker symbol VZ. Verizon, the price is here $58.52. This is annualized dividend. It's paying that over a year, and this is the yield 4.2%. Also, guys, you'll notice very similar to AT&T in terms of look at the green, very anemic dividend raises. Okay, doesn't grow the dividend that much. So I want you to get a flavor, a little mix of different companies. Let's look at Apple. Ticker symbol AAPL, one of the biggest companies out there. Very expensive company, huh? $324.90. And like dividend $3.08. Very low yield. See? Look at AT&T and Verizon, 4 or 5% yield. Dividend yield of Apple, very low, less than 1%. But I did a video on dividend yield, right? I told you dividend yield is affected by two numbers. Dividend yield is the annualized dividend divided by the price. There are two things that can affect the yield, right? You can either go up on the annualized amount of dividend, or if the price goes up. If the price goes up, the yield will go down, okay? Or if the yield goes down, or if the dividend goes down, the yield can also go down. So two things can affect the yield. So just because the yield is low doesn't mean it's a bad stock. It could mean the price is surging, which is a good thing. But anyhow, Apple for a long time did not pay dividend. It was a growth company. All the money made it put back in the company and reinvested. And they just started paying dividend, I think, in 2012. They're also aggressively paying dividend. You hear the green, 15% raise, 7.9, 10, almost 10, 10.5, 15.9. Apple had a large amount of cash overseas, and they were afraid to bring it back, what they call repatriation, because of the tax. But now that Trump has lowered corporate tax rate to about 20%, Apple is bringing all that money back, and it's going to reward shareholders. So 5.5% dividend yield, dividend increase the last time, guys, in May of 2019. And you can see May is when Apple raised its dividend. May, okay? So May of 2020, there's probably going to be another dividend raise. And that's how a lot of retirees, guys, live. They live off the dividend, guys. Let's look at another company, J&J, Johnson & Johnson, the big medical company, very diversified medical company. Okay, they have the consumers product, they have the medical devices, they have the drugs. It's a giant. I think the size of Johnson & Johnson about 300 in the 300 billion range. So it's trading at $150.35 annualized dividend here. You see it here. Dividend yield is 2.5%. And we look at the way it grows this dividend in the green, usually in the mid to high single digits. Okay, mid to high single digits, 5, 6, 7, which is good because if inflation is only 2 to 3%, and I'm getting a raise of about 7% every year, I'm way over inflation. I still have my buying power, and I don't have to raise a finger. I don't have to raise a finger for it, guys. The power of passive income. They seem to raise their dividend in May also. Okay, right now, 95 cents a share. And last time they raised it was 5.6%. So May of 2020, looking forward to another raise in Johnson & Johnson. We know they're going through a tough time right now, but they've been around for a long time, and we anticipate they will be around for a much longer time. Let's look at some utilities. If you live in New York, you got to pay your Con Ed bill. Consolidated Edison, everybody knows the Con Ed, which is the utility. That's our oil and natural gas in the New York area. Ticker symbol is ED, trading at $92.83 a share. This is the annualized dividend, guys, and this is the dividend yield. They usually raise their dividend in February, and it says here they usually, because it's a utility. Let me add that, guys. Utility are notorious for kind of very small dividend growth, and you see it here very small, almost like the telecom space, 3. It's a very, very small raise, but they have no competition. right? They are a regulated monopoly, right? If you're not gonna get your gas and power from Con Ed, where else are you gonna get it from? Nobody. So in collaboration with the government, they work to provide gas and power to different regions. And if they want to raise their price, that's why it's called a regulated monopoly, a regulated utility. They work in conjunction with the government and say, okay, well, the cost of goods and supplies are going up, so we'd like to raise our prices by 4, 5, 6%. And in collaboration with the government, they're able to do that. And the reason why they have to be regulated, because imagine if there was no regulation, Con Ed would go crazy, and all the other power utility, they're the only game in town. You don't want to pay us what we require? No power for you. That's why they have to be regulated. So we see here that they raised it again in February. The declaration date was January 16th. They never know about it, guys, but if you own it, this is what stuff is on automatic. They didn't know about it. Didn't go into any meeting, but they declared a dividend January 16th, right? And the record date was February 19th. So you have to be in the books by February 19th as owning the share. And it's trading ex-dividend without its dividend on February 18th. So you have to own it before February 18th. And the pay date is March 16th. A lot of people out there, guys, living off dividend from Con Ed, Johnson & Johnson, Home Depot, all these places. Look at another dividend, another utility company. It's Dominion Resources, also a utility. They in the region of in the South. I think they're in Virginia and in some other southern states. Ticker symbol D. The price is trading at $86.26. Annualized dividend for the year. The yield 4.4%. A little unusual for a utility because, like I said, they usually raise it very low, 4, 3, 2%. But look at Dominion raising it 9%. Okay, in 2019. But they didn't raise it again before that, 3 years before that. But pretty high yield. That's why a lot of people who have a dividend portfolio, they include a lot of our utilities for stable income. Because why do I have stable income? Because people pay their utility bills before they'll even buy medicine sometimes. They might not buy their blood pressure medication, but they'll keep the lights on, keep the power on, keep the heat on. Okay, let's look at one more. Ticker symbol FO, Southern Company, also a utility company. Ticker symbol SO. This is the price it's trading at, $68.93. The annualized dividend per year. This is the dividend yield. Also, because it's in the utility space, a low rate of increase into the dividend. But again, guys, 62 cents a share every quarter, right, for the dividend. We see here declaration date was January 17th. You got to be a shareholder of record by February 18th. It's trading without a dividend on February 14th. You have to buy the stock before February 14th, and the pay date March 6th. So also, what you see, guys, you'll see these companies pay different times, right? 3, 6, 9, 12. Some will pay 1, 4, 7, 11. And so on and so forth. So you have a mix of these stocks, guys, and you'll be able to get paid every month. Let's look at one more, guys, to tie this up. Starbucks. Everybody loves to go get their cappuccino, frappuccino. Starbucks, guys. Ticker symbol SBUX. It's trading at $89.59. The annualized dividend $1.44. The yield not that high, but the thing that you notice right away is that it's aggressively growing its dividend. So in your dividend portfolio, you might have a couple of mixes, guys. You might have some companies that are high yielders, like utility space, Dominion, Southern Company, but they don't grow their dividend that aggressively, but they're high. They have a high yield, and then you might have some companies that are kind of lower yield, but they aggressively grow their dividend, like something like Starbucks or something like that, or something like in between, like a Home Depot that's paying maybe 2% yield, but also aggressively growing their dividend, guys. So, guys, there's a quick video, guys, just to let you know there's a whole world out there, guys. There's companies out there who are providing services, products, that's growing their bottom line, rewarding shareholders for holding onto these companies, raising their dividend year over year. That's what they call dividend growth stocks, not just dividend stock, dividend growth stock. Because if you just pay dividend without growing your dividend, inflation will eat away your buying power. So as we continue to grow and learn and build, guys, we're going to continue to increase our passive income. If there's people out there, guys, you think could benefit from this information, let them know about the MD Investor channel where we are learning, we're reading, we're growing. We're going to break the cycle of generational poverty. We are going to set goals, achieve goals. We're going to continue to educate ourselves, continue to educate our children by increasing our financial intelligence and to just continue to command our money to grow. But not just to learn, guys, but to take action. This is the MD Investor, and I will see you on the next video. Don't forget, guys, to subscribe. Don't forget to like. Don't forget to hit the subscription bell so you'll be notified when new content comes out. MD Investor, and I'll see you on the next one.